Thank you for joining me on Project Tech Accounting YouTube channel. Today we are going to talk about the rules of debits and credits in accounting. The golden rule of accounting, which is understanding that debits always equals credit. This video is going to provide a clear and structured way for you to always know which side of the T account to use. Debit represents the left side of the T account, while credit represents the right side. But whether or not the account increases or decreases depends on the type of account. And this video is going to provide a clear understanding of the type of account and also which side of the account increases or decreases. This subject is very important for you to really understand the accounting mathematics and also be able to use the accounting software efficiently because having a good understanding of this will enable you to know which when a transaction occur, which accounts are being affected, and also the account you're going to select in the software to do your posting so that you will not post your transaction to a wrong account. So the concept of debit and credit is very important, and I also discover that most accounting students find this subject very challenging. This video is going to help you to understand this concept, and it will enable you to use your Sage software. Any accounting software is going to help you to use the accounting software. So this video is a must watch video if you must use accounting software efficiently. So whenever a transaction occur, you have to determine which two accounts are affected and decide whether it decreases or increases the account. Now, for looking at this now, for a credit account, an asset account, for an asset account, asset increases asset value. Sorry, debit increases asset value, while credit decreases asset value. As you can see, when you receive money in your bank account is an asset account. So anytime you receive money in your asset account, and that is going to be a debit transaction, which is going to increase the value of that particular account. But when you remove money from your account, maybe you paid a debt, you are going to credit that particular account, and it's going to decrease the asset value. So this is what happens to an asset account anytime a transaction occurs on it. And for the liability account, is a little bit different. When the credit increases the value on the right hand side of a liability account. For example, if a company borrows money, it gives it will be recorded on the right hand side of the T account, and this is a credit account, and is going to increase the liability account. As you can see here, anytime you borrow money, it increases the liability account, and that is going to be credit. Going to equity, you see that um, equity also increases the value on the right hand side. Equity generating revenue by providing service to customer increases the return earning account, which is an equity account, and this is is going to increase the value of the equity account on the right hand side. Again, dividend gives away cash to shareholders, so it decreases the equity. So when you give dividend out to your shareholders, it also decreases the equity of the company. Again, expenses too, maybe paying rent or even advertising or salary, this decreases the equity account. It decreases the equity account on the left hand side. So that is a debit. As you can see, if you go, it will debit whenever you pay debt, is going to debit the equity account on the left hand side. So in the next video, I'm going to talk about sample business transaction for a fictitious company and how to interpret it. So ensure you watch that video and kindly like, share and subscribe to our YouTube channel. Thank you.